Joining me here at the desk is Jay Woods, Chief Global Strategist at Freedom Capital Markets. All right, Jay, let's talk about the S&P 500. You describe it as bending but not breaking, and to that point, we saw some gains on Monday. So how do you determine that it's bending and not breaking?
Yeah, we're seeing a couple topping formations I don't like, but we're holding key support levels. So we are starting to make lower highs every time we rally. Now, that one support area, the 50-day moving average, which is at 67.13 as we enter the day, that's exactly where we stopped going up. So that floor that we were going up on this uptrend has now become the ceiling for now. We need to break back above that over the next week or so, and I think the Fed will be the reason we do. But we have to watch those October lows and now the November lows, which are just about 65.50. That's where buyers came into this market. That's where we want to see things hold. And if we go sideways for a little while, that's okay. But we want to get the resumption of this uptrend back sometime in the next week or two, or I'll be a little concerned.
What happened to seasonality this year? Because I was like, this month feels like what October was supposed to be. And, you know, I'm like, where's the holiday spirit here?
I know, as a technician, we love seasonality, and the trend has been our friend, so we always go with that. But the seasonal factors, August, September, like the worst 2 months, we were up both those months. October was volatile, we got that, but we didn't get a low in October. We got a relative low we're watching now, and then November, the best performing month of the year, the worst performing month of the year, or second worst. I think April was, I think March was worse. But yeah, we are not doing things according to plan, but hopefully we can get back on track because that secular uptrend is still there, but the seasonal factors have not been our friend, and I won't even talk about December seasonal factors now. We'll wait till my next appearance.
I know, maybe we don't want to jinx it.
Yeah, but right now we have to follow those trends, and the trends still are up, but they're starting, as I said, to roll a little bit, and these are normal pullbacks. A 5% pullback after a 40% run from those April lows. You know, when we live through it, it stinks, and when it doesn't match up seasonally, it's a little head scratching. But I'm not overly concerned. But we have one big thing to watch, and that'll be the Fed, and then Supreme Court ruling is the X factor. We don't know when that's going to come out, and if that comes out and surprises, and these tariffs now are uncertain again, that could throw a monkey wrench into this uptrend as well.
So, before we get a little bit further into the Fed, does the question about valuations matter? Because that's what, you know, it's been blamed for, the weakness that we've seen.
Some of the valuations, we saw froth in this market. It was more speculative assets and, you know, the quantum stocks, the Occlos of the world. Bitcoin, when that corrects over 30% from its highs, you get a little concerned, but the overall market didn't crack. We had valuation concerns because a lot of vocal people were, you know, trying to get Palantir off its perch. It had great earnings and it fell. Nvidia, great earnings and it fell. I think these stocks over the long term are just fine. I know there are a lot of people out there saying some negative things, but the valuations historically, Palantir, yes, excessive, but Palantir is more of a cult stock with a long runway as far as growth goes. Nvidia is a juggernaut. This is a stock that I think we're watching 175 closely. I want to see it hold, but to me, over the long term, this will be an entry point, and we've seen this stock consolidate after big runs, and we had a nice run going into this year. Was the best performing stock of the Mag 7. Now Google's eating its lunch, but to me, Nvidia is consolidating and it should be fine. Palantir holding the 200-day moving average. I did not think it would get back to that level, but these big names, if we're worried about valuations, I think it's a little overblown.
So for Nvidia, it has to hold around 175?
Right now, over the near term, we'd like to see that 175 level hold. If not, we have a potential leg lower. The 200-day moving average hasn't been tested in some time, you know, going back to Liberation Day. We could see that. I don't think it's going to happen, but you know, if the trend breaks, then my thesis may change a little bit.
Let's talk about another technical piece that you've been watching. You point out that over 80% of the S&P 500 traded below the 10-day moving average. How important is that, and what are you watching to confirm a rebound?
That's more for the traders down here. That's a short-term indicator. Yes, the 10-day moving average. When you see an acceleration of 80% of the stocks below, it means we are in a quick corrective phase, and it's a little overdone. So I think that's what was one of the things. The other contrarian indicator was sentiment. Sentiment hit an all-time low. Well, not an all-time low, but the lowest point this year, lower than Liberation Day.
Which was surprised me. I was like, why is consumer sentiment
when we're just off all-time highs? Yes. So that to me is a contrarian indicator as well. So we see some oversold indicators that make me optimistic over the short term. That will be fine. And now we just have to wait until that Fed meeting. And it's not even the decision. You know, cut or no cut. It's the language after the decision that's going to be fascinating, because we can cut and he can get very neutral, possibly hawkish in his tone. He's only going to have 3 or 4 meetings left after this one. So Powell, he's the X factor right now. And those comments, when he talks, he's been oddly quiet, are going to be very interesting come December 10th.
Are you expecting him to? I can't see him speaking before December 10th because, you know, every other Fed official is out making the rounds. But to your point, he's been quiet, and I just don't anticipate it before.
He's basically just kind of sitting back, letting all the Fed officials do the talking, which is what we got out of the minutes. There was dissension in the ranks. We had a dissension for another cut. We had a dissension for no cut in the last meeting, and now you can see it. There's about 4 in the camp of cutting, 4 in the camp of no cut, and then you have 4 that are, you know, on the fence. Powell being one of them. We don't know what he's going to do, but here's the thing. We don't have the hard data that they like. No CPI until after the meeting. No unemployment number until after the meeting. So you really, and the market has shown us that we're focused in on what they have to say. So when New York Fed President Williams spoke, and he's someone that's been kind of in the neutral camp, said, no, I'm focused more on unemployment, and that leans towards a cut because those numbers have been the one factor that causes the cut in the first place. It got the market a little bit excited. Now we're in that technical zone below the 50-day moving average and then above the 65.50 level, and it's a slow week, so I don't expect a big move this week, but that's what's great about the market. It always surprises us.
And next week begins December.
December, I know. Yes. It's going to be a long December.
I know you don't want to jinx December, so... Okay, let me just get one quick thought on December. Besides the Fed, what are you paying attention to? We've got CrowdStrike coming up, Salesforce.
Yeah, that's it as far as the real big earnings go. But I am focused on what the Fed impact will be, and then we'll see what the changes at the Fed are starting. Mr. Myron won't be back there as a voting member come January, so he'll be replaced. Jerome Powell, the end of his tenure, how does he want his legacy to be? And then, you know,
and who's the new Fed chair?
Yeah, I know. Year-end window dressing. We'll see if we get a little bit of a rally into the year-end. I suspect we will. But like I said, the X factor is this Supreme Court decision on tariffs. I don't know when it's going to come out. There's no, you know, guide as to when this decision comes. When they met, it was supposed to be sometime in the second quarter, end of first quarter next year, but it's a rush decision, and we'll see what when that comes out. That could shock this market if we have to redo the tariff situation, because, you know, what does the market hate? It hates uncertainty. When were we most uncertain? Back in March and April during Liberation Day.
Okay, hopefully there won't be any more tariff turbulence. We shall see. That is Jay Woods, Chief Global Strategist of Freedom Capital Markets.